Hey everyone, welcome. Last week, I had a little bit of a rant about Intel earnings, but did not talk much about one very positive, bright spot in that earnings report, and that was Mobileye, the company that Intel acquired back in 2017, that they sold a little bit of on public markets last year. They re-IPO'd it, and it's now available to purchase for us individual investors again. I did a deep dive into Mobileye shortly after the IPO late last year, and thus far I have been very wrong about this stock. So let me give you a fourth quarter 2022 update on Mobileye. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this. Give you a very high level view here first. Revenue was up a very impressive 59% year over year in Q4 to $565 million. Company also reported a bit of a surprise in earnings per share on a GAAP basis, 4 cents. Company also free cash flow positive for full. Free cash flow was $435 million for full year 2022. Give you a quick look here at the company's current full year 2023 guidance. They did say in some prepared remarks that this guidance is a bit cautious given the current economic environment, possible recession, maybe a downturn in automotive sales, but nevertheless, revenue expected to be roughly $2.25 billion at the midpoint of that guidance. That is about a 20% year over year increase. So an expected slowdown from what was just reported, but pretty darn good nonetheless. The company is going to report more than likely an operating loss. However, when you back out non-cash items like amortization of intangible assets, as well as stock-based compensation to employees, you do get an adjusted operating profit expected for the year, which probably means we're looking at a company that remains free cash flow positive in 2023, even though Mobileye is dumping a lot of research and development dollars into its platform and trying to maintain its lead for autonomous vehicle and advanced driver assist systems for automobiles, trying to stay ahead of competitors like Qualcomm and as well as NVIDIA. And based on this guidance, Mobileye trades for almost 50 times expected adjusted operating profit for 2023. This is still not a cheap stock, hasn't gotten any cheaper since the last video I did, given the present outlook for 2023. Now, that being said, this carries a premium price for a reason. A ton of money headed towards the automotive market in the decade ahead. And Mobileye thinks it has a huge opportunity ahead of it. They revealed some kind of non-specific numbers at the Consumer Electronics Show in early January. The company's CEO and co-founder at CES said they see a $17 billion pipeline of revenue from its advanced driver assist systems, or ADAS systems, through 2030. $17 billion, considering the company just did just shy of $2 billion this past year and expects to just barely exceed $2 billion in the next year. There's a lot of potential revenue. Their backlog of orders, specifically from their EyeQ chips that support all of this advanced driver assist and further on down the road, autonomous vehicle technology, is going to be a big driver of growth in the coming year. You can see from the company's website here some of the capabilities the EyeQ chip unlocks in cars that, in auto manufacturers that install them. Things like augmented reality, heads-up displays for the driver, attaching other driver assist software features through the EyeQ chip, as well as in-vehicle infotainment systems. They give a little breakdown here of how that EyeQ chip works, and you can see how embedded it can be and customizable it can be for an automaker. Maybe they have their own custom applications, or maybe some third-party applications they need to integrate into the system overall, and they can do that with Mobileye's designs. And in addition to actual chip sales, you can see here that SuperVision, that's what Mobileye calls its advanced driver assist software package. So Mobileye is very much also a software company. Over time, this can be a major player, a major software as a service player to the automotive industry, as they unlock progressive features like lane assist, adaptive cruise control, blind spot detection, maybe a feature that allows your car to parallel park itself, so you don't have to hassle with that. Progressive features like that unlocked over time on the way to full autonomy, basically where you don't have to keep your eyes on the road anymore, and you can play a video game on the infotainment system or on your phone or whatever, and the car takes care of all of that for you. So recurring software revenue here. Also some mobility services, similar to SuperVision. The company has not been ready to reveal who some of those customers are, but these are probably transportation companies that maybe have large fleets that they need to manage with software, and also would like to unlock vehicle automation over time to make their operations more efficient. Mobileye has some customers in the works there as well that they see could turn into some significant revenue drivers for them down the road. I'm just going to hit on valuation one more time here, because the market was off to a really hot start in January 2023. 50 times expected adjusted operating profit for the coming year is no joke. It's an expensive stock. And as many of you know, expensive stocks can be extremely volatile. I am still personally not ready to go make a Mobileye purchase at this point. I would be much more comfortable seeing shares maybe down in the low 30s or approaching $30 a share before I start to nibble on this one. There's also the fact that Intel still owns 94% of shares. So Mobileye is still very much under control of Intel. And as far as we know at this point, Intel could still use Mobileye stock as an ATM, basically. If Intel continues to struggle and lose money, they could sell some of their shares for cash to funnel that money into what they have deemed more core businesses for them. Hopefully that doesn't happen. And for the sake of Intel, it would, I think if you're an Intel shareholder, it would be nice to see them say, hey, Mobileye is actually one of those core businesses we believe in long term. But at this point, it doesn't look like that's the case. So possibly some selling pressure if Intel decides to offload some more of its stock at some point. But overall, I have really, really warmed up to Mobileye in recent months since the IPO. Again, personally, I'm not ready to buy any shares yet, but this one is definitely on my radar. One I might add just a little bit into my portfolio in the coming months. Stay tuned for more on Intel and Mobileye in the coming months. We'll have some more updates on these, a lot of exciting things happening specifically in the auto market this year. If you haven't done so yet, hit the subscribe button. We'll be back again soon.